Good evening. Welcome to CNC3's special edition on the Clico crisis. I am Jeremy Matuk. Ever since the budget speech was delivered on September 8th, the government's plan to assist Clico policyholders and depositors has caused a lot of public discussion and has been a source of contention among various interest groups. The sums of money involved are staggering. We have learnt that over 7 billion has already been paid out, but the hole remains massive. The Prime Minister has said that the government just does not have the money to clean up all the mess. During the global meltdown 2 years ago, the then Minister of Finance boasted that the country had avoided the effects of a contagion as a result of prudent fiscal management. Recent revelations not only contradict that boast, but suggest that the impact on our economy is likely to be bigger than it was on most others. Put in perspective, the US banking crisis and bailout amounted to 1 to 2% of US GDP. Our crisis amounts to nearly 10% of our GDP. We have a $19 billion problem when government revenues are expected to total $42 billion. That's over 45% of our annual budget, so it is a massive problem. Trinidad and Tobago has never faced a bigger financial crisis. This crisis has a long history, going back well over a decade. Warning flags have been hoisted many times in many quarters, but no one seemed to want to bell the cat. To be brutally honest, this is a story of failure at every level, starting with the companies and their top management, the regulators, successive governments, the auditors, and even many naive and careless investors. It is a sad, sorry tale of incompetence and intransigence. 20 months after the central bank had to step in, there has been no improvement in the regulatory legislation. Indeed, it seems that either we have only recently realized the immensity of the problem, or it was being kept a secret. For a country seeking to become the financial capital of the region, it is an embarrassing state of affairs and a serious reality check. My guest this evening to shed light on these issues are Government Senator Patrick Watson, who is Director of the Arthur Lewis Institute of Social and Economic Studies at UWI, Peter Purmell of the Clico Policyholders Group, and Douglas Camacho, who is President of the Association of Trinidad and Tobago Insurance Companies, more popularly known as ATIC. Welcome, gentlemen. Thanks for coming on the show.
Thank you, Jeremy. Thank you.
Senator Patrick Watson, let me start with you.
Why not?
Since the budget speech, the government has twisted this way and that, looking to introduce legislation to curtail legal challenges, and then wisely pulling it back. What is the latest position of the government?
The latest position is precisely that. And in fact, I'm glad you started at that point, because I want to indicate that I'm here tonight. When we were invited in the first instance to come here, that legislation was going to be introduced in Parliament. It has been withdrawn. In the meanwhile, a committee has been set up to speak with the interested groups and to see if other things can be arrived at, if there can be some compromise on the matter, and to at least hear what they have to say. And there has also been the setting up of a commission of inquiry. That is the situation as it stands today. And the offer, as was enunciated in the budget, is still technically on the table, but clearly there's going to be some hesitation in implementing until there is some meeting of the minds on this matter.
And further consultation?
Yes.
Peter Purmell, are you satisfied with the developments to date, and how would you like to see this crisis resolved?
Okay. Just to add some to the developments that Patrick enunciated here. There has been some developments since the Prime Minister's statement on Friday. I had a meeting with a certain government official today, and I'm going to announce further details of that meeting at a press conference to be held tomorrow at 4 p.m. at the Cascadia Hotel.
Okay.
So I just put that on the table for the time being.
Right.
Certainly we welcome the developments vis-a-vis the pulling back of that draconian piece of legislation that was coming to the Parliament to deny essentially the policyholders their recourse to the courts. I think it was really enlightened thinking on the part of the Prime Minister to make that particular move. We also welcome the establishment of that technical committee chaired by Mr. Vasant Bharat. And I think he's going to have, it's an interministerial committee. There are going to be other senior cabinet ministers forming part of that committee. That means that there's an official line of communication that has been open to the policyholders.
That's what you were asking for all the time, wasn't it?
Yes, that's what we've been asking for, and we are appreciative of that initiative being established.
Douglas Camacho, as president of ATIC, what in your opinion is the way forward?
Well, clearly in the case of Clico, specifically, the matter is not as simple as people sometimes seem to want to make it. Clico itself pursued a business model that was unique. Unique here in Trinidad and unique in the Caribbean, in that they, unlike most traditional companies, were taking money on a short-term basis and largely investing it in longer-term type assets, which had much higher risk profiles with a view to bringing back much higher returns. I think it's going to be interesting to see the 14,000 odd members of the public who have been affected by this Clico situation, particularly on the EFPA side, and how the rest of the country is going to react to having to pay the bill. So I myself am waiting with bated breath. The area that really concerns ATIC is the archaic legislation, and it is something that we had been lobbying over the last 2 decades to try and have something done about. And in fact, it's about 2.5 years ago where the government got serious and started to put in place a new piece of insurance legislation. But to date, it has not yet been presented to the Parliament. We understand it's likely to be on this year's Parliament, or this term's parliamentary agenda, and we certainly hope that that piece of legislation is brought into the public domain, because the legislation we operate under is really a 1966 piece of legislation that bears little relevance to the realities of the modern business world and the business models, particularly the conglomerate side of things that exist. So,
the most burning question has been, why should taxpayers bail out naive or greedy investors? I know it's been said that the investors are taxpayers too, but that evades the real issue. After all, this is not the first time that investors have been burnt by incompetent or unscrupulous financial institutions. We had trade confirmers, we had International Trust. Internationally, there was Enron, Alan Stanford, Bernie Madoff. What does it take for investors to learn caveat emptor, or the age-old wisdom that high return means high risk? Peter, I direct that question at you.
Sure. Well, let's step back a bit before I get directly to the answering that question. I had a conversation with a senior official of Clico recently, and they were giving me the background and the history to the EFPA, and I think it's important for the public to be aware of that.
Well, we're going to come to that. We're going to come to that.
Okay.
Yeah.
But it impacts directly on your question in terms of high risk. The purpose of the EFPA was really to deal with a liquidity situation at Clico. And it was established, and I think I can call his name, Claude Musab Ali, who is a respected actuary. And the product was developed to avoid having to go to the middleman, which was the banks and financial institutions, to borrow money directly. What they said is they're going to borrow from the individual. So while the banks were charging, let's say 16% interest on their loans, they were borrowing it from the individuals at maybe 9-10%. And therefore it made good business sense. You're saving 5-6% on the cost of borrowing by borrowing it, but from the individuals. What happened, I understand, is that they got carried away, and instead of just using it to deal with liquidity issues, it became the flagship product of the organization. And hence you saw where in the Minister of Finance's statement, he said that 6 billion of liabilities will belong to the traditional policy,
insurance,
where you had 12 billion, which is twice the
Correct.
traditional. So in truth and in fact, Clico had moved away from its original moorings of selling the traditional insurance policies to selling a more exotic policy known as the EFPA, which in fact is a single annuity premium, which is sold all over the world. It's a bona fide product. And therefore, in those circumstances, one cannot necessarily fault a policyholder or an investor who would have purchased a policy from Clico. We are not the ones who determine what kind of investments underlie those policies.
But Peter, you're missing one point.
Sure.
I'm sorry to interrupt you.
Sure.
These EFPAs were paying interest rates that were 50% higher than any other deposit instrument in the market. What happened to the concept of risk and return? That's the core of my question. That's what I wanted to address.
To how they were able to do that.
Well, we know how they did it, but their alarm bells didn't go off.
No, but if you're paying the bank 14% on a loan, and you can get that same money from an individual.
But this was